It began with a dream, a vision of peer-to-peer transactions. No trusted third party, proof of work. From a dream to a trillion-dollar industry, blockchain has transformed our world. It laid the foundation for trust, transparency, and decentralization in a wide range of systems. But like any growing entity, our industry has faced its share of trials. Unprofessional conduct, scams, misplaced trust have cast shadows on our industry. But in the face of challenges, leaders rise. We're not alone in this journey. Together, we stand at a transformative crossroads. Trailblazing startups and digital artists, all gathering, all converging. Europe's new Web3 event gathering the brightest minds for sharing ideas, forging connections, and designing the future of Web3. Let's learn from the past and consolidate our shared mission. Rekindling passion, rebuilding trust, shaping tomorrow. The human element cannot be ignored. From proof of work to proof of talk. Welcome.
Good morning. So good to see you all today. How you feeling? I know it's early, right? But Nova, we're coming in with the energy, aren't we?
We are coming in with the energy. We're going to need everyone to do a little dance this morning. So we're going to have everyone stand up. Let's go. Stand up, stand up, stand up, stand up, stand up.
I don't think they're doing it. They're feeling it. They're
Let's
like,
go.
no.
Stand up, stand up. Everyone's like, no, she's joking. No, we're going to stand. We're going to, pretend for those that didn't have coffee or matcha this morning, we're going to get that energy in, okay? All right? So we're going to do the electric slide.
You guys feeling it? They're like looking at us like, oh man, you're crazy. But no, really, getting up, get the energy flowing. I mean, it was a fantastic night last night, right?
It was. And you guys can sit down now.
Yeah.
No one did electric slide but me up here.
Yeah, just get you nice and awake because we have some amazing panels planned for today. I don't know, is anybody here for the first time today, or are you all here from yesterday? Looks like they're all here from yesterday, or they're still sleeping, in which case we need to keep going. We need to get the energy up.
All right, well, who thinks they flew in from the furthest destination? Hands up. Furthest destination. Everyone's local?
Our crowd is really international. Are all of you guys from Europe? Anybody from the US in here? Guys, are you awake?
What?
There we go. All right.
All right.
So last night we had a fantastic dinner.
Yes.
Right? The VIP dinner, if you held VIP tickets, it was really cool. If you're thinking about it for next year, one of the things that I love most about Proof of Talk is that everybody is so accessible. You come here to make meaningful connections, to propel your project forward, to, I don't know, get inspired, and you can do that here. And in a lot of conferences, you don't have that accessibility. So that's something really special about this place. Right.
Absolutely. It was a really nice time last night. Very intimate, lots of great connections and conversations. So definitely keep that in mind for next year.
Yeah, and so just a recap of yesterday. I mean, Proof of Talk. Wow. First of all, just to introduce ourselves, for anybody that wasn't here yesterday, my name is Megan Nelson. I go by Crypto Megan. I'm currently on a world tour at destinations around the world, getting involved in what I believe to be the most impactful, meaningful events. And Proof of Talk was most definitely one on my radar, and one of the most anticipated of the year. I absolutely love what's happening here. The meaningful conversations, pushing the boundaries, right, and not just having conversations, but also healthy debates and coming to conclusions, trying to make decisions, push this industry forward. So it was a fantastic day yesterday. I know there were a lot of key takeaways. One of those was bridging the gap. So it's kind of like this iconic setting where we're at now at the Louvre here in Paris, the kind of convergence of the old world and the new world, right? TradFi and crypto. What were one of your key takeaways from yesterday, Nova?
I'm going to do a quick intro for those that weren't here yesterday. Hi, I'm Nova Lorraine. I am an award-winning fashion designer, futurist, and author. Super excited about my new book, second book that's out. It's called The Jockey on the Horse, A Creative's Guide to AI. So if you want to know how to thrive in the age of AI, definitely check out that book. I'm also the founder of the House of Nova, building the future fashion house. So bridging couture, psychology, and emerging technology. And yeah, yesterday was amazing. We had some really great takeaways. I'm on the Polka Dot Mona Lisa stage. We had some contrasting opinions, which is always nice to see. Individuals that weren't always in agreement in terms of regulations and Web3 and blockchain and what is the future of Bitcoin and should layer 2s exist or not. But there were also a lot of agreement and harmony on stage as well, especially as it related to access, as you mentioned earlier, and how technology is helping emerging markets get more access to financial assets. Also, zero-knowledge proof and how this can be a way to scale blockchain, and many, many more topics that the speakers were in agreement with. So it was a really great day on stage.
Yeah, definitely an evolution from last year's first edition. You can tell that we've matured as a space, that now we're in a different place. We're at an inflection point, a very important point in the industry where, how we move forward is critical and crucial in order to get those new people, the next billion users on board, right? We talk about that all the time, but what does that actually look like? How do we actually do that? What are the implementations of this technology that are happening right now? So now, yesterday we started with an opening speech about Bitcoin being the hardest money, about the Bitcoin standard, and we transitioned throughout the day to talk about things like regulation and what's happening in the landscape now. Today we're going to switch gears a little bit. On my stage, we'll be talking about, right now on the first panel, we'll be talking about how to build trust in a token economy. Building trust is essential. Now we have the tech, we're going to go implement it. How do we get people to trust this new technology for the first time when they're using it, or even users that exist? And I know you're having an interesting topic.
Yeah, so we're opening up on the Polkadot Mona Lisa stage with liquidity dynamics, and we're closing out with how blockchain is shaping fan engagement in sports and everything else in between. So definitely check out the Polkadot Mona Lisa stage for some really cool conversations as well.
Yeah, it's going to be, and also we got some stuff going on upstairs, right?
Yeah, so if you want to hear some dynamic startups give their pitches to investors, 10:40 a.m. upstairs. And not only that, we have interactive workshops in the afternoon upstairs as well. So definitely go upstairs, check it out. There's some good things happening there.
Yes, fantastic. So I hope you all came with a lot of energy. We're going to call this proof of attendance this morning for all you guys here, because you made it. You got here. I know it's hard when you're going out, and Paris is a dynamic city, and there's a lot of connections to be made, but we're so glad to have you here. It's going to be a fantastic day, action-packed. We got some amazing speakers. So I think we jump right into it then. What do you say?
I say let's jump.
All right, let's do it. Warm round of applause, please, for the first,
Thank you.
second day now, Proof of Talk. Thank you, Nova. All right, so for our first panel, we are going to transition to what I was speaking about earlier, transparency first. First and foremost, this is a brand new technology. We're trying to get the rest of the world on board. I think I remember a clip about about Bill Gates when he was explaining the internet on The Tonight Show, and people were laughing at him like, we would never use that email thing. And, well, here we are in that same phase in blockchain, right? So transparency first, how...
Happy Tuesday. Good morning, good morning. Are you guys awake? Yeah, I know. It's day 2, it's early, it's kind of chilly in Paris today, but you made it. All right, so really, really happy to see you guys this morning. We're gonna have some fun today, okay? And we're gonna kick it off with a really exciting panel. I'm putting a lot of pressure on these speakers. A really exciting panel. It will be exciting today. Yesterday was great. We talked about everything from Bitcoin to ZK proof, to lessons learned, what can we do to improve the space, and we're going to continue on the incredible conversations throughout the day. So to open it up, we're going to have a conversation on liquidity dynamics, giving color to the charts. And I would like to welcome on stage Paula Tavangar. Please come up on stage, and she's from Injaz Capital. Welcome. And can we have a round of applause? We then have Sonia Shaw. Welcome to the stage, CoinW. Max, Boonen, please come on up. B2C2 and PV01. Of course. And Martins Benkitis, welcome on stage from Gravity Team.
A beautiful and crowded room. Good morning, everyone. Thank you so much for coming for this panel. Maybe I would just ask all of our wonderful panelists to start by shortly introducing yourselves.
Good morning, everyone. My name is Sonia Shaw. I'm the president of CoinW Global. We're a centralized exchange established from 2017. Currently, we are VARA licensed based in Dubai. Globally, about 10 million users. We have both spot and derivative. So here in Proof of Talk, just want to have a look at the European market, especially with Mega coming. Yeah, I want to talk to the Web3 crypto people in Europe. And so glad to be here.
Hi, everyone, and thank you for coming in so early. My name is Max. I run a small company called PV01. We put bonds on the blockchain, government bonds, and soon corporate bonds. Before that, I founded B2C2, which is one of the main dealers, main market makers in the space, maybe the biggest, who knows. And before that, I was an interest rates trader at Goldman.
Hello, everyone. My name is Martins. I'm the CEO and co-founder of Gravity Team. Gravity Team is one of the leading market makers in the space. We provide liquidity to tokenized projects as well as exchanges. So we're in the business since 2018 and trade roughly around 1% of all spot volume.
So as you can see from the background of our panelists, we have the perfect set here to discuss liquidity in the markets today. Maybe if we look in the past 2 years, the market changed so much. But if we look in general at the history of Web3, generally more of the major drops in market were caused by liquidity events and by liquidations by big funds. So here, do you still think that there is a possibility for manipulation potentially in the market due to the concentration of liquidity in few big players? Do you see that still? Maybe let's start with Sonia, or?
It's so early for this so serious topic, but yes, I mean, manipulation, I wouldn't say that. And then, so concentration of liquidity, I think in crypto market it's unavoidable at this stage to have that efficiency, the user experience, and then, of course, simply transaction going through. I mean, we're still at early stage of the whole market and then the whole industry. The whole industry liquidity is like only 2.6 at this stage, market cap. So, I mean, without the big players joining the industry and providing, so for example, market makers and liquidity providers providing the service, a lot of transactions won't be able to go through. When we talk about this is including DEX, decentralized exchange, and then of course centralized exchange. And but of course, everything comes with double-edged swords. It does create the risk of single point failures. For example, FTX event actually put put the industry back at least 1 or 2 years. So at this stage, there are a lot of regulations trying to figure out what's going to happen to all these big players and market makers and then big hedge funds and who actually institutional investors who want to come into industry. But yeah, so I mean, manipulation is a very negative word. I wouldn't use that word.
Yeah, I would use a softer word too. But actually, I'm really interested to see what Max has to say, especially with your background in JP Morgan. So how do you see it also in comparison to traditional finance and what has been happening in the early days there? And have we learned the lessons?
I think there's no problem actually here with concentration of liquidity. First of all, the crypto market is extremely liquid. It's, I think, last time I checked, maybe 2 years ago, Bitcoin would have been the number 10 currency in terms of volumes if it were accounted for in the BIS publishes volumes, and Bitcoin would be something like number 10. Secondly, I also compared, when people were talking about the crypto ETFs, I compared the spreads, the depth, the liquidity of oil ETFs, because people were saying, well, Bitcoin's a commodity, but it's volatile, it's dangerous. Turns out Bitcoin is more liquid than oil, at least if you look at public markets. So it's extremely liquid, and it makes sense. Foreign exchange markets are the most liquid because they're the simplest. There's nothing dumber than trading a euro against a dollar. And in that sense, trading a Bitcoin against a euro or a dollar, it's very dumb. It's difficult to get it wrong, and that's why being so easy, it attracts so much liquidity, and the prices are so good. So there's a ton of liquidity in crypto. Now, whether it's concentrated, well, guess what? All markets that operate on an exchange model are winner takes all, because the fastest, the smartest, they all just take, as you said, do 1% of the volume. That's a very good number. But the biggest market makers are going to do something like 10, 20% of the volume. So really, you can have 5 of them. And that's just the way it is. There's a few different models where you can have more players. I guess AMMs in DeFi can attract anyone who's willing to contribute. And because AMMs put everyone on the same level, because you don't trade against a specific person, you trade against a pool, so everyone participates in every trade. It's a little bit different, but generally speaking, markets are roughly winner takes all, or they're oligopolies, so they just attract a few large players, and that's just the way it is. They remain very efficient, so the fact that you have an oligopoly doesn't mean that the markets are not efficient. So I think it's no problem. And I also want to touch quickly on the question of manipulation. I've been in crypto for 11 years. I started electronic market making on Mongox, the failed exchange, in 2013, and ever since then, and maybe even before, people were saying the Bitcoin price is manipulated, the whales, the this, China, what have you. It's all bullshit. No one in 11 years, and that's a discussion I had with the CEO of Wintermute recently, no one has ever been able to explain to us what the manipulation is. Okay, if there's such a trick, give us the trick. I want to know the trick too. And Wintermute and B2C2 pretty collectively have traded pretty trillions of dollars of crypto, and we've never been able to find a trick. So I think the accusations of manipulation in the crypto market, they simply amount to cope.
Okay, interesting view. Let's go to you, Martin.
Yeah, I kind of agree with Max in terms of liquidity on the larger cap tokens. So if we look at Bitcoin and Ethereum, and really...
So sorry to interrupt here, but maybe, okay, if we exclude Bitcoin, let's make it more interesting. If we exclude Bitcoin and Ethereum, let's go down the ranking.
So as we dive deeper into the rabbit hole and look at maybe even beyond top 100 projects, I think it can get more risky over there. You might have a few market makers that have a lot of inventory in possession of the token, and that the moment when they have a lot of inventory, they can actually kind of paint the price and draw the market attention, and afterwards dump on the market. So these kind of movements theoretically and practically can exist in markets, and I think investors should be very careful with the projects that are actually larger, smaller market cap, because of the concentration of liquidity in the hands of very few. It can pose some risks, and it's also an unregulated environment. So with respect to trading in, say, non-regulated exchanges in Asia, things can happen there, and caution should be taken over there. But I think the top 10 market, top 10 coins are generally safe and extremely liquid, and no market manipulation would be found over there.
I'd like to speak to you after the panel because I want to know your tricks. Maybe you have them, yeah.
Indeed, maybe where the question was coming from is just to be very transparent with the average investor, right? Because they're even, I understand your point of view as a market maker, for example, but there are a lot of tokens also sometimes stuck with the exchanges, right? Some of the listing requirements are giving a huge amount of tokens to the exchange, then you give some to the market makers, then you give some to the KOLs. So actually few people at a very early stage have a pretty big power to move the price of a certain token. So anyway, let's move to the, we didn't reach an agreement fully here, but let's move to the next question, which is actually slightly related to the first one, and it's about algorithmic trading, algorithms, and how they affect the market. Do you think that they contribute for the overall health of the market, or they create this fake volume that is actually hurting eventually the prices?
Mm-hmm. Yeah, so it's a very large topic to look at, algorithmic trading, because it can encompass so many things. but definitely, I think it's, first of all, a force for good. You have, crypto has a particular trait that the liquidity is dispersed across multiple venues. And in order to ensure price stability across those multiple venues, you definitely need algorithms that are high frequency and fast responsive just to ensure that liquidity is dispersed. So without them, the prices would be very, very much distorted. However, so that's on the good side of algorithmic trading. Of course, there's so much you can do. So I think whatever is illegal in traditional markets, like spoofing, wash trading, and things like that, is also bad for for crypto markets, and we are seeing less of that. In the previous bull run, really there was wash trading going on left and right, but these days there's much less of that, and there's more credibility in the market. So yeah, I think the industry is self-governing itself in a better way.
Indeed, actually, that's something that we're observing in all markets, also in traditional, like when there are a lot of orders, a lot of algos trading, flash crashes, etc. But again, like if we exclude Bitcoin and Ethereum, I still feel that crypto market is still way more volatile than the major indexes. So it's easier to observe a flash crash or that consistent uptrend or downtrend, going very fast. At least that's from my observation. What do you think, Max, especially compared to traditional finance?
Flash crashes?
More of the algorithms and how they affect the market, and how do you find them particularly in crypto? Do you find them more useful, or you think that they're eventually hurting the prices?
Algos are good. An algorithm is a set of rules that you follow to make decisions, and maybe we should call that automation rather than algorithmic trading, because the idea is always that you try to imagine what, as a human, you would do, and you try to make it automated by using a machine instead. So, I mean, it's simple stuff like if the price goes down 5%, maybe you want to buy because you think it's going to go back up. Then you can add as much complexity as you want on top. It doesn't really change the initial intuition. I think it's fine. There are probably actually some algorithms that are predatory. I remember when Binance launched the futures in September 2019, Alameda, the defeated market maker, tried to manipulate the market, yes, indeed, and they were actually quite successful. So maybe I should take back some of this earlier stuff I said. What they did is that they placed large sell orders on that new market. It wasn't very liquid at the time. And then they placed bids 30% lower. And that was discovered because Binance had a leak in their API, and you could see the orders of everyone. It's kind of crazy when you think about it. And so indeed, yeah, they did succeed in manipulating the market. Actually, Binance published a tweet saying that they were actually unsuccessful. I'm not sure exactly what happened, but at least it could have worked, potentially. So yeah, what we call running stops, which is triggering liquidations in the hope of purchasing at a better price, or vice versa. Yeah, potentially that can work. Now, the thing is that markets tend to be rather liquid, so you could do that on something that's not very liquid, but as soon as it becomes very liquid, you're going to compete with everyone else to try to capture the liquidation transactions. And so in the end, you end up not making that much money. I don't think it's a strategy that's profitable nowadays. Now, the thing is, crypto markets are extremely capitalistic in a way. You can do essentially anything you like. Yes, sure, there's a bit of regulation, but what is the European regulator going to do if you're some random dude in your garage in Shenzhen trading on Binance? There's nothing they can do. But what crypto firms end up doing is that they also incorporate in their own processes, in their own algorithms, the possibility that others are trying to take advantage of them. So in the end, it's very, it evolves quite fast, and there's like a selection of the fittest at play here. So in the end, I think that algorithms are simply automation. Manipulation, it's possible that there is some at the margin, it's not the main of the market, but crypto firms end up protecting themselves from those possibilities by incorporating those risks.
Indeed, some great, deeper insights. That's what I was looking for. Thank you so much, Max. So maybe you already mentioned regulation. I know everybody hates talking about it, but let's make it exciting, right? Like in terms of your experience, the way you see the market, and now with different regulations coming in different regions, how do you see that impacting overall the liquidity, both on the decentralized and centralized exchanges?
Yeah, I think...
Please go ahead.
Yeah, okay. I think that there's still, in general, of course, regulation is good. I think MiCA coming in is a great sign for the whole industry, for the credibility, building trust among players that is that we need. There are some risks that also exist for the growth of the industry from the regulation side, and that comes with just unfit regulation. And what the main aspects of that I would see in the securities laws. So you have a few countries where they are trying to apply securities laws on crypto trading, and that can end up quite destructive for the ecosystem. So such talks, for example, have been in South Korea, where they wanted to apply securities laws on crypto trading, which would essentially kind of like put a lot of restrictions on crypto trading, require only accredited investors to participate and so on. So I think that's a risk, and I hope it doesn't, that movement doesn't take over globally. But overall, like sound regulation, understanding how, directing how assets should be custodied, and separating maybe a bit trading from custody is overall a good thing for the industry.
Mm-hmm. So can we move to Sonia? How do you see it as a president of an exchange that is based out of Asia? You also have a license in Dubai. So how do you feel those different regulations affecting you?
I think, I mean, from the early stage, I think it's definitely putting quite a difficult impact and hard impact on the whole liquidity in the market when the regulation kicks in, especially the regulations on the stablecoin part, because stablecoin plays quite an important part of the role in this whole crypto market, you know, especially in the liquidity part. And then how stablecoins regulated will create a lot of impact on the overall stablecoin issuers, and then that will definitely put pressure of the market liquidity in a certain region. For example, for MiCA coming in the end of June, I think quite a lot of stablecoins, popular ones, USDT, USDC, will be pretty much, you know, have to go through the regulations scrutiny, and then if they don't really get license and compliance in the region, then they'd have to be forced out of the market, and then that would definitely put a lot of pressure on the whole overall liquidity and then of the market. So from that perspective, it's definitely a hard, you know, transition for a lot of industry players at this stage. But of course, for long run, when regulations compliance and kick in, that means we're going mainstream, and then we're going through, you know, getting more institutionalized, more consumer protection. So for long run, it's definitely a positive impact. But we just have to go through the initial stage. For a lot of companies, have to probably navigate how to really go through this phase.
I also agree. I think we shifted from the Wild West to a pretty well-regulated environment now, and it continues. So sorry, Max, you have something to add? I think you don't agree what you had to add.
Yeah, I think regulation really achieves its objectives. And in the end, people who love regulation tend to be the incumbents. So if you're regulated, you love regulation because it's expensive, and that's a barrier to entry. When I started B2C2 in 2015, I did it with my last bonus. It was less than $1 million, and managed to turn that into a reasonably sized company. Today, you cannot start a market maker with less than $50 million. It cannot be done. Forget about it. If you don't have $50 million to spend, you cannot start a market maker, because it's not only extremely competitive, but also the cost of regulation is just completely insane. And in the end, yeah, most people don't like regulation. It's just something that we have to work with. And I'm reminded of an anecdote. In 2019, B2C2 onboarded the biggest broker in the world in terms of volume. It's a broker that trades more than $100 billion a day. So you'd think, okay, pretty serious people, actually highly regulated, etc. And at the time, we had a couple legal entities, and I said, well, probably you can face one of the entities in the United Kingdom. One of them is regulated, one of them is not regulated. Which one would you prefer to face? The response from the biggest broker in the world was, don't know, don't care. They didn't give a shit. And I think that goes to the heart of the fact that everyone in financial markets understands that regulation is something you've got to comply with, but the objectives of regulation remain extremely vague. There's always a hint of consumer protection, but in most cases, it's patently obvious that it doesn't really work. I'll give you an example. You mentioned securities laws. So now we have those tokens that represent treasuries on chain. You can get yield, risk-free yield, etc. All those things are securities, so they're almost impossible to sell to retail individuals because they're securities. Everyone's avoiding the US because of that. It's a mess. Now, it's impossible to lose money if you buy short-dated US treasuries. You simply cannot lose money. At the same time, if you have an account on Robinhood, you can buy the shittiest of the shittiest stocks in the United States and possibly abroad with 2 clicks of a button. Reddit is littered with screenshots of retail users who are down like 99.9% on stupid options trades, and yet you essentially go to jail if you sell tokenized US treasuries to retail. It's completely insane. And I think just that one example is enough to completely discredit the whole regulatory apparatus. Now, I'm sure that it's possible to create sound and reasonable regulation. I just don't really think we have that today.
Yeah, I fully agree. We have limited time left, so I left the best question for last. And I think it will be very interesting because each of us comes from a different perspective. And the last question is more generic, at the same time very related to the liquidity. And it is, how do you project yourselves like the prices would move, how they would be affected by the liquidity, and how the prices would move in general in the next, let's say, 12 to 15 months. So from my perspective, more on the VC and investment side, that's what I'm tracking. I had seen really awakening of most of the very early stage investment firms, which is usually a big factor, right? Like when you have a lot of early stage investment, then you have more launches, a lot of new projects came to market that were in the works for more than 2 years. So we see this very slow awakening of the market. And now then the really blue chip, we haven't really seen the altcoin season yet. So yeah, again, from your perspective, how do you see the prices and liquidity move in the next 12 to 15 months? So maybe shall we start with Sonia and then we go?
I think in the last 6 months of the year, most of the liquidity came back because of the Bitcoin ETF, and then that's probably why the Bitcoin has hit the all-time high, and then you see quite a lot of the top 100 coins and then big market cap coins that didn't really have moved too much, except a lot of meme coins, which means generally driven by the retail investors. So in general, I think, most of the liquidity hasn't really come back yet because of the interest rate and then the pressure of the overall economy. So I think moving forward, our expectation is we'll definitely see more retail liquidity coming back. And then, at this stage, it's still not reaching all-time high as to 2021 yet, if you look at the data. And then, but overall, the market depth and market volume has come back. But in terms of the general industry size and then the liquidity, we are expecting in the next 12 to 15 months, due to the the overall economic condition and then the rates and everything will improve. Positive.
Great. You, Max?
I think for crypto, for the price to go down, all you need is people to be bored. So the price has a natural tendency, I think, to stagnate or go down. And for it to go up, you need a catalyst. What were the catalysts historically? I remember, I think it was 2013, Cyprus had a banking crisis, and there was a big pop in Bitcoin because people were afraid that the banks were not safe and their money was going to be poofed. Then we had money printing in, starting from roughly 2017. That was a huge catalyst as well for crypto prices. What's going to be in the next one? There could be more money printing, but I wouldn't count on it. In my view, interest rates are going up.
What about the banks?
The banks are, I think, mostly safe. The one thing that's not safe is that we're not safe because there's a real problem in Europe and also elsewhere with the state of government finance, and higher taxes are coming. And I think we're going to be very surprised with the violence with which states are going to come after our money, and I think that might become a next catalyst. So predatory taxation in Europe and abroad, I think, is coming, and we'll see what that's going to mean for people and how they want to protect their wealth.
Thank you.
Yeah, I'm overall positive about the outlook of the crypto markets in a kind of general sense. I think, yeah, it comes to the global macroeconomic factors. I do expect, well, I would like to bet that the interest rates will go down longer term, that they won't be here for that long. And yeah, I think the macro has always been a very important factor for crypto, and that will also kind of play out in the future. So, yeah.
Indeed, it will. But I see that we're in consensus that everybody's pretty optimistic for the next 12 to 15 months. Amazing. Do we have more time, or? We have a bit more. So maybe then closing remarks, right? Anything related to the topic, or maybe related to your personal views based on the company that you're.
Does everyone agree we're in the bull run already?
Oh, very excited, everyone.
Because I want to know. I mean, yeah. I want to know.
Shall we maybe do a poll? Like, who believes that we're already on the bull run?
Everyone, who thinks that we're already in the bull run? Okay, we're not. Because, you know, not everyone agrees. So
I think not everybody has woken up yet, that's it.
Yeah, I mean, that's the thing. Like, I think we're not really in the full bull run yet, and then still quite a lot of opportunity out there. But bear in mind, from the centralized exchange perspective, we do see the behavior, the consumer behavior, the project behavior, even all the big institutional players' behavior quite different compared to the last bull run. So history repeats itself, but it's not always the same, so be cautious.
I think if everyone raises their hand, you call that a bubble, not a bull run. And that's when you want to get out. But I simply want to thank everyone for turning up. Yeah, I also, talking about the market dynamics further, yeah, we trade a lot on the emerging markets. And I agree. I agree with Sonia that we haven't seen that craze yet. That was in 2021, but yeah, that was also not sustainable in long term. So we have to, yeah, I think, kind of cautiously be optimistic about the future ahead, but also not lose our heads around it.
Thank you so much. Thanks so much to the panelists. We turned a nice topic to a great, great discussion. Thank you so much for the insights. And of course, thank you so much for attending this session.
Thank you, Paula.